Hey everyone, it's Conrad Bobilek here, CEO of Investors Prime Real Estate and best-selling international author of Australian Real Estate Investing Made Simple. And welcome to today's video. This video is very special because I'm going to be talking about a strategy that is a little bit advanced for beginners, but it's very lucrative. In fact, it's made a lot of money for me and a lot of my clients because it enables you to use something called deposit bond or a bank guarantee, in the case of a bank, as a substitute for cash deposits. And I know one of the toughest obstacles for a lot of investors for getting into the property market is the ability to come up with a deposit. If you look at the median price in Melbourne, it's just under $1 million now, but it hit 1,060,000 just a few years ago. I know Sydney now is 1 million, 1.2. But reality is that in Melbourne, for an average house in a normal suburb, you need 1.2 to 1.5 million. Let's face it. I mean, you're not going to get much for $1 million. Point Cook House and land packages are selling for $1 million now. So that ship has sailed. So, and a trophy home in Melbourne now is $2.5 to $3 million. So coming up with $100,000, $150,000, $200,000 is a huge challenge for a lot of people. And in fact, it's the biggest obstacle that's stopping young people from entering the property market. The ability to get around that, it could be the difference between you starting your property portfolio and buying your dream home, or sitting on the sidelines indefinitely and watching others make money around you. And that's why I wanted to create this video, to give you a really practical insight into the difference between deposit bonds and bank guarantees, how they're used, exactly where to go and get them, how much they cost. And also I'm going to show you a real example of a property that I've personally bought and I have used a bank guarantee to secure that property. And since then, I've made over $1 million in capital gain. I'm going to show you the exact property and the strategy that I've used to make money using this strategy. So sit back, get a coffee, and welcome to today's video. Now, before we get started, I want to do a bit of a disclaimer. I'm not here to basically give you any financial advice. I'm just here to educate you and share with you information that's working for myself and other clients. I've never met you. I'm not aware of your financial standing or risk profile. So if you are going to act on anything, definitely get surrounded with people that are smarter than you and people that are qualified to give you advice. If you're going to work with a financial planner, make sure they have the exact results that you want. So if you want to buy 10 properties over 10 years, make sure your financial planner has 10 properties as well. If they don't deal with them, because broke people can't teach you how to become wealthy. So let's get into it. A bit about myself. If you want to check out my website, conradbobilek.com.au. As I mentioned before, and obviously I've got a YouTube channel, otherwise you wouldn't be here. My background is pretty conservative and boring. I've got a diploma in financial services in real estate, mortgage broking, financial planning. I wasted 3 years of my life doing a business degree at Monash University. Considered doing an MBA, more bad advice, but I thought, you know what, I actually want to start making some money. The most important thing is that I'm actually a property investor right here in Melbourne with a multi-million-dollar property portfolio. So everything that I'm sharing with you, I'm either doing myself or my clients are doing and executing right now in the market. So I'm not a theorist, I'm not an academic. I'm actually someone that's doing it and actually getting clients to do exactly what I'm teaching you. There is no strategy that I've covered on my YouTube channel or in my live events that I haven't done myself or my clients haven't executed. So it's all real, it's not theory. Because remember, there's a lot of theorists out there teaching a lot of really good stuff, but when it comes to implementing, none of that stuff works. And the best example is a lot of the American stuff that Robert Kiyosaki teaches has no application in the Australian property market. Even though I love Kiyosaki, he's one of my favorite coaches on psychology and mindset. And I've got to tell you, if you're going to read one book on psychology and mindset, Rich Dad, Poor Dad and Cash Flow Quadrant are probably the best 2 books you can read, apart from Think and Grow Rich as a Man Thinketh. But, in terms of strategies that are applicable in the Australian property market, America is completely different, and hence none of that stuff works here. So the reason I'm telling you this, because you're going to hear some stuff from people from overseas about the property market in Australia, or things that they think they work here and they actually don't work here. And as an ex-mortgage broker, ex-banker, I used to come across this all the time from investors. They read a book, read some new information, they get excited, come to me as a mortgage broker or a banker, and I said, no, well, that doesn't work in Australia. We have a different system, can't do that lending. This stuff, though, is actually really high level. In fact, I would say bank guarantees and deposit bonds are fairly sophisticated instruments, as I'll cover. We're probably ahead of the curve here in Australia compared to America and the UK. when it comes to this specific strategy. By the way, I just want to thank you guys for supporting me. My book's gone #1 multiple times for property investing and as well as property finance. I want to thank you guys for buying my book. I keep getting #1 best-selling author in various categories in Amazon. Let's face it, Amazon is like, the main thing now that people look for. So I really want to thank you guys for buying my book. It's one of those things where you publish a book, you don't know if anyone's going to buy it. So I've sold tens of thousands of copies now. I'm really proud of it. And thank you for supporting me. If you want to get a copy, just jump onto realestatemadesimple.com.au. For my real estate book, you get a bunch of freebies, and also bookonfinance.com.au for my finance book. And this teaches you, by the way, how to do a mortgage reduction program and smash decades off your mortgage. So if you've got a 30-year P&I loan, guys, the best $30 you can spend is this book, because it'll teach you exactly step-by-step how to reduce your mortgage, smash it in record time, and save potentially hundreds of thousands of dollars in interest repayments to the bank. So let's face it, guys, the banks don't need more money. They're already making billions every quarter. The last thing you want to do is give your hard-earned money to the banks. Now, let's talk about deposit bonds versus bank guarantees. The most simplest, I'm going to definitions in detail because I really want you to get this concept, because for some of you, this is a real game changer. Now, I don't like using that term game changer because it gets overused so much in a lot of videos, but I really believe in property investing, deposit bonds and bank guarantees, if done correctly, is truly a game changer because it allows you to buy a property with virtually no money. And I'm going to explain the process to you exactly how that works and exactly what I mean by that. Now, the main difference between deposit bonds and bank guarantees is deposit bonds are issued by insurance companies, and they don't require any security against the deposit bond. So if you're getting a $100,000 deposit bond or $200,000 deposit bond, they don't actually take a caveat or an interest over any property. A bank guarantee is the same instrument, but it's issued by a banking institution. And normally what they'll like to do is lock up a deposit bond equal to the bank guarantee, or you got to show that you have equity in your home equivalent to the bank guarantee, and they'll lock up that equity. So deposit bonds are superior to bank guarantees, even though they're more expensive, because they're issued by insurance companies rather than banks. You don't need to have any equity at all to secure them. You can be a first-time buyer and get a deposit bond as long as you pass the criteria, which I'll cover with you. Bank guarantees are more conservative, they're cheaper, but you need equity. Now, the good thing is with bank guarantees, you can use other people's equity as well, like your parents or grandparents. So without actually getting a deposit or redraw facility against their property, you can leverage their assets without actually getting them in trouble if something goes wrong. So what is a deposit bond or a bank guarantee? And we'll talk about deposit bonds mainly in this video. It's basically a contract guaranteeing payment of a set amount, which is deposited at the settlement date by the insurance company or you. That's what it is. So it's a substitute for cash. So if you're buying a property, let's say, for example, $1 million investment property, and usually deposit bonds and bank guarantees are really good for off-the-plan purchases. Let's say that investment property settles in 12 months' time, and you think the market's going to go up during that period of time and it's going to be worth $1.2 million. Doesn't need to be, it can be $1 million. Instead of putting $100,000 down, which is 10% cash deposit, you can get a deposit substitute from Deposit Power, for example, and there's a substitute for cash. And it's basically a contract from the insurance company guaranteeing that they will actually pay that 10% deposit bond at settlement, or you pay either or you'll create that equity in the property. That's what it is. So it's basically a guarantee from an insurance company of the 10% deposit. It's a substitute for cash. So it's basically a financial instrument. It's a binding contract. It's very clever because really, if you don't need that cash deposit to be saved. When it's really effectively used is when the market is about to head up. And then in Melbourne, we're at 9 o'clock on the property clock from Herron Todd White Valuers, going up to 12. So the next 3 years in Melbourne will have high growth. Now, providing that interest rates start getting reduced, because at the moment we're kind of going sideways in Melbourne. Brisbane's boomed, Sydney has taken off a little bit, but Melbourne is still going sideways because we're doing it tough here. We had the land tax introduced, so a lot of investors got penalized for land tax, which means it's really unfeasible now to buy large blocks of land in Melbourne en masse. You can't get around anymore buying 1,000 square meter blocks of land because land tax will kill you. You'll be paying $6,000 to $10,000 per year. And that's why townhouses are the only vehicle we can really build wealth in Melbourne, because a townhouse with 100 square meters of land has 1 to 10 to 1 ratio versus an old house. So you're paying a fraction of a land tax. Anyway, going back to this example, let's say you've got a property and you think it's $1 million, but you think there's going to be growth in the market for the next 2 years, and that property is going to go up to 1.2 million over 12 months. It could be 24 months, could be 36 months. So what happens is, rather than putting the cash deposit in, and obviously you need 10%, the bank will give you the other 90%. So the most important thing I would specify before you get a bank guarantee deposit bond is make sure you get a pre-approval that you can get the other 90%. Okay, if you can't get the other 90%, don't get a bank guarantee or a deposit bond, because you won't be able to settle. So the deposit bond or bank guarantee just purely act as a substitute for your cash deposit. That's all it is. The bank still has to give you the other 90%. So you still have to go qualify for a loan. Now, to give you a really rough, very rough rule of thumb in terms of how much you can borrow as an individual, multiply your annual income by 6. So if you're on $100,000 per year, you can borrow around 600,000. If there's a couple of you on 100 each, you can borrow 1.2 million. It's tough now. Borrowing capacities have been smashed because interest rates are 7.5%. 2 years ago, interest rates were 2.3%, 2.1. You could have borrowed 3 times more 3 years ago than today. And this is the problem. A lot of people sit on the sidelines, and now the borrowing capacity has been smashed. But roughly 6 times is a good ratio. So if you're on 60 grand a year times 6, $360,000. That's your maximum borrowing capacity. And I'm saying roughly because I'm assuming you have one source of income, you're an employee. If you're a director of a company or a subcontractor and you have multiple incomes, it becomes more complex. And there's obviously things like what debts you have at the moment. If you've got car loans, HEX debts, ATO debts, all that's factored in. But roughly, as a really rough rule of thumb, that's what it is. So this is kind of a good strategy, I guess, to use if you're buying your first home, or if you're speculating in property, that the property will go up in value, and you want to create a 20% gap in the property. So, and I'll cover that in a second. So what is a deposit bond? The deposit bond, also known as a deposit guarantee, is a substitute for cash deposits that are needed when buying a home or when bidding at auctions. You can use them at auctions as well. If the guarantee that is used, it is a guarantee that is used instead of cash to pay for your deposit when exchange contracts on the property purchase. A bond acts as an insurance that the buyer will come up with a deposit at the time of settlement. The person who takes out the bond is responsible for paying the deposit amount and 100% of the purchase price at settlement. If the buyer fails to close the purchase at settlement, the vendor claims the deposit guarantee from the bond provider. So you've got to come up with a 10% cash at settlement or create it in the transaction. If you default at settlement, the insurance company will forfeit their deposit bond to the vendor. So they'll keep the 100,000. They'll come after you for 100 grand. So you've got to make sure that you understand it's a substitute only into the day of settlement. Okay. So if you don't come up with a day of settlement with the 10% and the 90%, you're in trouble. That's why you always have to have a plan B and C. Joint ventures, equity partners, maybe get your parents to come in as guarantors as a worst case scenario. Never go in just relying on yourself, thinking that the property will appreciate in value and create that 20% gap for you. That's a huge risk in terms of what is possible. So let's talk about auction bonds. An auction bond is a deposit that is issued without the details of the property being purchased. This enables you to attend a bid and numerous auctions with one auction bond, which is really convenient. If you're a successful bidder, you complete the details of the auction bond certificate before handing it over to secure the property. Auction bonds deposits are being used instead of upfront cash deposits to secure a property at auction. You only fill in the following details at the auction bond once you win at the auction. So you could be going on a Saturday to 5 auctions. You don't need to apply for 5 separate deposit bonds because you might be outbid for some properties. Some auctions might be cancelled. So once you get a kind of pre-approval to a limit, then you know how much you got to play with. And all you need is the vendor's full name, property address, the final purchase price. The one-off fee for an auction bond is paid before it's issued. Once payment is successful, the auction bond is sent via post or through email. Applications for auction bonds can be done online through the provider's websites. You have to speak to your real estate agent, auctioneer, or vendor or legal representative to confirm that an auction bond will be accepted. So before you bid for property, you can't just say at the end, by the way, I haven't got cash deposit, or I can't transfer 10%. Here's a deposit bond or a bank guarantee. You've got to get that pre-approval before you start bidding at the auction. So you contact the real estate office the day before, and say, look, I'm interested in bidding for this property. I'm not going to have 10% deposit because I'm a sophisticated property investor. I'll be using deposit bonds. Are you happy to accept them? Sometimes they'll say no. The vendor wants cash. He doesn't like deposit bonds. Most of the time they'll say, yeah, no problem. It just depends on the agent, depends on the area, depends on how much and what the property is, and which state it's in as well. So there's a lot of factors there. How does the deposit bond work? The buyer will apply for the deposit bond with a provider. The buyer has to prove that sufficient funds will be available to complete the purchase at settlement. So normally you got to show if you can't come up or create that 10% in the property, where are you going to get the 10% substitute? It could be your parents, it could be joint venture partners. Maybe you've got a share portfolio that you don't want to sell until you have to settle and you're going to liquidate those shares. Or maybe there's a term deposit that's maturing around about settlement. There's a lot of different reasons why people use deposit bonds and bank guarantees as a substitute for cash deposits. So the certificate is given to the seller at the seller's solicitor, who will hold on to the bond until settlement time. The seller or the solicitor can only claim the bond if the buyer does not pay the deposit at the time of settlement. So what happens on the day of settlement is you usually come up with a 10% deposit and the bond just ceases to exist. It actually expires. It doesn't get claimed. It has fulfilled its function, which is to take you through that period of time between when you've secured the property. It could be a 90-day settlement, or it could be a 2-year off the plan, and the period of time where you've got to, and the day you have to settle. So you've got to make sure you'll be able to settle. And once again, because I don't want you guys to take risks, so I want to specify this: you have to make sure you're pre-approved, and you got to know where your 10% is coming from on the day of settlement. But see, day of settlement could be 5 years from now if you're buying a 5-year off the plan apartment, or you're buying a house and land package in a stage developer where there's 50 stages and stage 40 is being released in 5 years from now, and because it takes 3 months to sell each stage. So it's a really good way to secure growth assets without a cash outlay. That's the cool thing. How to get approved for a deposit bond. When settlement draws near, you eventually have to pay the deposit plus full purchase price of the additional costs like stamp duty. Obviously, death and taxes, guys, you can't avoid it. Therefore, you've got to show evidence that sufficient funds to complete the purchase at settlement. To get approved, you got to show your formal home loan approval. So you got to actually show an indicative pre-approval letter or a funding proposal from a broker or direct to a lender saying, congratulations, based on your current financial standing, you've been pre-approved for $1 million for an investment property with a rental yield of 4%, blah, 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 right? Or a bank will say you've got a formal approval or conditional approval subject to satisfactory income verification, ID, and clear title up to $1 million. If you do not have formal approval because you're buying an off the plan or an auction settlement takes more than 6 months, the bond provider will do an asset income liability assessment. So if you're doing something with, let's say, 4 years off the plan, chances are your situation will change in 4 years' time. You could be in a different industry, different career. You could be with different partners. I mean, 4 years is a long time. 6 months, 90 days, chances are nothing will change. 6 months, potentially things can change. We never know where things change, but they change. At 4 years, 5 years, no one knows what's going to happen. You could be in a different country. So all you got to do is the best they can do at the time is assess your current situation and your financial standing, and then give you a pre-approval based on the strength of your financial at that point in time. You've got to have a copy of the contract of property purchase, evidence of savings, term deposits, share certificates. So you can't just be, I'm buying a $2 million property, I've got $5 in my bank account. Bank statements showing where the funds will come from at settlement. You don't need to show bank statements. You can show, for example, balance of a term deposit, or you can show shareholdings, or you can have a guaranteed letter, a gift letter from your grandparents or your parents saying they will gift you $100,000 in XYZ time. So there's other ways, that other documentation that the insurance company will accept in substitute for showing how you're going to come up with a 10% at settlement. But you've got to actually have a methodology of coming up with a 10% at settlement. The good thing is, guys, you can apply for multiple deposit bonds with multiple companies and show the same $100,000 evidence. So you're buying 5 properties through 5 different insurance companies. Not that I would recommend that. There's very high speculation and risk. You don't need to show 5 lots of coverage of your 10%. You just need to show 1 coverage. So it's very powerful because it really unlocks your ability to secure growth assets with a long-term settlement in a growth market. Now, once again, I want to do a bit of a disclaimer. Remember, if you've watched my YouTube videos, I always say to people, it's not timing of the market, it's time in the market that will make you wealthy. And timing of the market, is very speculative because things can turn against you. No one saw COVID-19 coming. We thought we were going to go into the next growth phase of the Melbourne property market. Then COVID came in and everything got shut down. I mean, no one saw that coming. Okay. So there's things like that that will happen from time to time. You've just got to be smart about it. That's why having a network of like-minded individuals, joint venture partners, family, friends with equity, as they say, your net wealth will be determined by your network. If applicable, evidence of funds like first home owners grants as well. How much does it cost? It's about 1.3% of the deposit required as a one-off fee. So short-term deposits, which are valid for 6 months, usually cost 1.3% of the deposit amount, while long-term bonds, which are valid from 6 months to 48 months, are looked on by case-by-case scenario. For example, for a $300,000 purchase, which I don't know what you're going to buy for $300,000, in less than 6 months, you'll need a deposit of $30,000. 10% of the purchase, and the deposit premium being $390, which is super cheap. But one of my clients just bought a property in Geelong for $300,000, so you can still get properties, out there. Who can apply for deposit bonds? Anyone looking to buy a residential commercial property, whether it's off the plan or established, including vacant land, and even house and land packages can apply. All you need is Australian citizen and permanent residents, trusts, self-managed super funds, registered entities, partnerships. Anyone can do it. You can do it through your self-managed super fund. You can do everything. What documents do you need? To get approved for a deposit bond, the documents you need: a copy of the contract of sale, or you get an indicative pre-approval because you're going to be bidding for multiple properties, copy of a home loan approval, evidence of funds, and copy of the grant letters, if applicable. Any grant letters, which are, rebates from the government and so forth. If you already have formal approval, I'll settle within 6 months. Contract of sale for purchase property, contract of sale for the property, letters from the banks, the lender, ID. Very straightforward, guys. If you're buying off the plan, the settlement will take more than 6 months. Or if you're buying through a self-managed super fund, contract of sale, proof of income or tax returns for 2 years, rates notices on the properties owned, rental statements for investment properties if you have any, and then photo ID for all applicants. It's very basic. Like I've done applications for deposit bonds in 10 minutes, and I've got everything saved in folders. I mean, it's super simple, like you wouldn't believe. Who should use deposit bonds? There are several reasons and situations who you should use it and why you should use it. So here's some examples, and I want to just cover these because maybe some of these will resonate with you, and this could be the game changer for you getting to the market. You have access to cash and won't have to dip into your savings, which is crucial when savings are tied up in equity. Maybe it's the wrong time to get equity out. Getting equity out now is 7.5%. Getting equity out 2 years ago was 2%. So, it's cheaper to get equity out previously. So this substitutes, and this really works well, by the way, when interest rates are high, because, if you're looking, I'll show you how much it costs from Deposit Power in a second, because I jumped onto their website. They've got a really good calculator. But when interest rates are really high, like 7-8%, deposit bonds and bank guarantees are really competitive because they're so much cheaper than what you're paying in equity release or lines of credit. When lines of credit and equity release are really cheap, like 2%, 1.5, they're pretty much at par, or even in some cases more expensive than getting equity release from your property. So they're really good now. They're really attractive right now because interest rates are very high. I'm seeing a lot of borrowings between 6.5 and 7.5, depending on what industry and qualifications you have. You're going for simultaneous settlements if you've sold your current home and funds are not available as deposit to buy a new home. So instead of bridge financing or things like that, you can use deposit bonds, bank guarantees to cover you between buying a property and then selling your home, which could be a 6-month settlement or 4-month settlement, and then paying out the actual deposit on the other property. You won't pay a penalty for breaking a fixed term investment or selling shares. If you cancel a term deposit before its maturity date, or a bond or a government bond, you get penalized in how much interest you earn. So you could have a deposit bond, or let's say you got a term deposit with CBA for 100 grand, paying you 7%, but if you break it early, you get 2.5%. or 3%. So you lose more than half. So it's worthwhile to get a bank guaranteed deposit bond, wait for the term deposit to mature, and then access that deposit bond, and you use that as a cash substitute to buy property. As an investor, you can use it when your funds are non-liquid assets. Bond gives you the flexibility to purchase the property immediately instead of waiting for the 10% deposit. So you could be waiting to sell something. Farmland, for example, takes a long time to sell. It could be a car, it could be commercial property, it could be, something that takes a while to liquidate. This is a perfect solution. And then the dream home or the dream investment property comes along, you want to jump on it immediately. You don't want to be sitting out there going, oh man, if I only had the 10% deposit, I would have secured it. It's cheaper than borrowing, especially if you're getting bridge finance. You just need to pay a small fee on the bond issuer, which is negligible to the interest you'll have to pay on the loan. Application is quick. You just need to sign an application form and provide necessary documents. It could be approved in less than 3 hours. Like I said, I've done them in 10 minutes, approval the same day usually or the next day. Very quick, very straightforward. I've gone to auctions on Saturdays where I've applied for deposit bonds, bank guarantees on Friday morning, and I got a pre-approval by Friday end of day. So they're super quick, guys. It's a no-brainer. You can bid at auction without having to worry about arranging cash deposits. These are known as auction bonds. You only need to write the amount you've bid at the auction and pass it over to secure the purchase. If the bid is unsuccessful at the first auction, you can still use the bond at other auctions. You can even get a refund if the return or the unused bond for 30 days of issue. So if you go to auctions for 30 days and you haven't bought anything, you can get a full refund because effectively you haven't activated the deposit bond. It doesn't cost the insurance company any money. So this is the other beautiful thing is where if you're buying a property out there, you've got cash sitting there available to be drawn down as a deposit, it might not be earning you the optimum interest rate compared to locking it up in a long-term investment like a bond or a term deposit. Who should I use a deposit? But why should I use a deposit bond rather? Since it's a loan, you only have to pay a one-off fee. You won't have to keep up with the recurring interest payments. So if you take out 100 grand, you got to pay monthly interest. If you take out this, you pay a one-off fee and that's it. The deposit bond is covered by the National Consumer Credit Protection Act, which includes the National Credit Code, NCC. You have the flexibility to choose between short-term and long-term bonds depending on your settlement. So 6 months to 48 months. But you can go up to even 5 years. It can even be used for off-the-plan purchase, for land, construction, and extended settlement. What are the risks? There are risks, as with everything, guys. There's no such thing as a risk-free investment. If someone says so, it's probably a scam. There are risks associated with deposit bonds as well. In some cases, the real estate agent or vendor will not accept deposit bond as part of the contract. So the buyer will have to come up with a cash deposit. That's why it's important to speak to the real estate agent, the vendor, before the auction or before you purchase the property. The application has gone through the financial check to ensure they can pay off the cash deposit along with the purchase price and other associated costs with buying a property. That's why working with a broker is so important because let's say you go to NAB. And look, NAB's got a really good suite of products. I used to work for NAB. I was in private banking. I worked for Medfin. Love NAB, big fan. Not so much of the management, but the product range. And I've got NAB accounts. I've always had NAB loans and accounts. But NAB can only sell you NAB products. If you go to a good broker, some of the brokers that I work with have access to 100, even 150 lenders. So they could have access to 3,500 loan packages compared to 200 loan packages or 150 from some of the smaller banks. So, having that pre-approval and having that relationship with a broker is so vital when you're buying a property with a long-term settlement where things can change economically or in your personal life as well. Deposit bonds versus bank guarantee, what's the difference? The idea behind the bank guarantee is deposit bonds are similar. There are differences between them. A bank guarantee is a guarantee from the lender to ensure the liabilities of the debt will be met. The key differences are bank guarantees are secured, which means you require real estate or cash to secure and release deposit bonds. So deposit bonds are unsecured. So with banks, they want to see equity in the property and they lock up that equity. Or they want to see the term deposit and they lock it up. Bank guarantees usually have a higher setup and ongoing costs than deposit bonds are the one-off fee. Bank guarantees need more paperwork while deposit bonds are quicker to obtain. So very straightforward, very cool. So once again, it's very simple, guys. I like to keep things very simple. It's a substitute for cash deposit. It's a contract from a insurance company or a bank guaranteeing payment at settlement of 10% deposit. And what it is used for with sophisticated investors like myself is if there's an uplift potential in the property over the next 12 to 24 months, where you can create a gap of, let's say, 10 or 20%, you can settle the property against the high valuation, therefore not needing to put any money into the property. And I'll show you a real example that I've done, and I'll show you some examples that my clients have done in a second. So here's an investment property, $1 million, 12 months period, it goes to 1.2. Therefore, you can borrow against that property and create the equity gap in that property. Therefore, you don't need to put any money into the property. So what this means is between you coming up with a 10% deposit bond and the bank coming up with 90%, you can settle the property with virtually no money down, except you got to pay for stamp duty. Now, I've done transactions where the equity gap that I've created in the property, I'll show you in a second what I mean, covered my stamp duty as well, which is crazy. So let's say you're buying a property and you use a deposit bond to hold and to secure the property for 24 months. So you got an off-the-plan townhouse. It takes 24 months to build, right? And they're very common. Most townhouses that I source are 6 months to build, 7 months maximum, especially when there's a small development of 3, 4, 2 on the block. When you have a larger project, like I'll show you two in Essendon in a second, where you got underground construction and you got to dig down, which is commercial grade construction. You got lifts, you got commercial air conditioners, all that kind of stuff. They tend to take 24 months to build. But it's a good thing. And I've seen them blow out up to 36 months, which is fantastic because by the time you settle, you're making 50, 100 grand for every year while you're waiting for them to be completed. So let's say you get $1 million property using a 10% deposit bond. So 10% deposit is 100,000. The bank will loan you 90%, which is 900,000. And let's say stamp duty in Victoria with legals, all inclusive, is $60,000, just under $60,000, like 58,000 something. So you need 1,060,000 to come up at settlement. After 2 years, the property is valued at 1.2 million. You borrow 90% against 1.2 million, which is 1,080,000. 1,080,000 covers your entire property, the deposit bond, and stamp duty. So you've put nothing into the property at all. In fact, you got 20,000 left over in cash that covers your original deposit bond fee as well. So you're actually in front by probably $18,000 in cash. Now, I'll show you a transaction that I've done for myself and my clients. And once again, can you guarantee that an asset in anything will go up in over 24 months? Of course not. We're making guesstimated intelligent decisions based on performance, the market, et cetera, right? There's all these different factors that contribute why properties go up in value. And I cover these in my live events. I mean, there's a whole list. And there's 10 major driving factors, and then there's about 46 due diligence criteria. But yeah, we can make an educated decision, and we know the market is cyclical, and we know we have a shortage of properties in Australia. We know that we've got a massive migration, influx into the country. So $1 million property, what you're trying to do with deposit bonds and bank guarantees to settle with no money down is to create a 20% gap between the purchase price and settlement, which I'll show you examples of in a second. If you create a 20% gap, so if a property goes from 1 million to 1.2, or from 500 to 600, which, look, in Queensland, how many properties went from 500 to 600 in the last 2 years, or from 1 million to 1.2? I mean, thousands of properties, So if you knew how to do this, you could have got into the Queensland market and settled with no money down completely. You must create a 20% value gap between the original purchase price and the valuation at settlement. Deposit Power is the main company that it's really got the biggest market share in this space. A lot of the smaller companies, they're very volatile, and a lot of developers and vendors won't accept them. So if you're going to go for deposit bond, use Deposit Power, which is depositpower.com.au. And by the way, I don't get anything for it. I've got no affiliation with Deposit Power. I'm just giving you the information because I want you guys to succeed. There's a lot of the smaller ones, but a lot of developers go, no, I've never heard of that company. I don't want to use that because what if they fold? So Deposit Power is pretty much the main one that's left. That's pretty much good. Now you can jump onto their website. They've got a really good calculator which gives an idea of how much it will cost, or you can just ring them up on 1-800-678-979. So this is just some numbers that I threw into the calculator Individual in Victoria, house under construction, 12-month settlement, $1 million for $100,000 deposit. You're looking at $2,470 deposit bond fee. If you're looking at 24 months, $5,280. And then if you're looking at 36 months, $7,520. And you can use this for individual, company, individuals as trustee for trust, company as trustee for trust, individuals as trustee for self-managed super fund, companies as trustee for self-managed super fund. So, for 4 years or 3 years, 36 months, 7,502 is pretty cool. I mean, can go up to 48 months. You can even get 5 years. So you're putting in $10,000 and you're controlling an asset with $1 million over a number of years. That's effectively what you're doing. So, and that's what property investing is all about. It's about leveraging growth assets over time using the least amount of your own money. That's really what property is. You always want to put the least amount of your own money, 10%, 5%, which most developers want to agree to, or you can use a deposit bond or a bank guarantee, which is still 10%, but it's guaranteed by a third party, not yourself. So that's a really good instrument to do this. And look, like I said, and I know I sound like a broken record, always have a plan B. Always prepare for the worst. Expect the best, okay? Prepare for the worst. I'll show you an example how I made $1 million using this strategy. So this is a property, which it's an investment property in Vermont that I purchased. And this property here was purchased in December 2007 at $550,000. Now, the reason, and I lived in St Kilda and Elwood, I don't know anything about Mitcham, Vermont, Vermont South, or those areas. I never had really interest in those suburbs, to be quite frank with you. Most of my properties are in the Bayside and the eastern suburbs. This is far eastern suburbs. But what happened was the E-Link was being connected and at Boronia Road, which means that these outer suburbs like Mitcham, Bayswater, Vermont, instead of taking 40 minutes to get to the city, they'll be 25 minutes, half an hour to get to the city. So I knew there's going to be massive growth for 2 years when EastLink connected the gap, which is that highway that goes around the eastern suburbs. So I started my research a year before the connection took place, and I researched the market. I found this property on 1,300 square meter block. Look, eventually I'm probably going to develop it. I've secured it using a bank guarantee for 10%. In 2008, in December, it settled. It was valued at $750,000. Now, I was hoping it would be worth 650. It went up to 750, which is tremendous. And I'll take full credit for that, by the way. So there was an uplift of, $200,000 in 12 months on that property, which was great. And I'll do another video on this property because I bought it at a discount. So I made money on the way in and during the settlement phase, and I timed the market perfectly as well. There's a number of factors that play into this. It's not as easy as I make it sound, but it's doable. And remember, the biggest risk in investing, guys, is you. There's no market risk. You're the risk. Your lack of knowledge or is a lack of skills is the risk. That's going to determine your outcome. It's like with anything. Now, instead of putting $55,000 cash deposit down, I actually didn't want to do that because I was trading shares at the time. I was trading options and I was making my money work hard for me. I was making 5, 6, 7% per month. So there was no point, me freeing up any of that money and locking it in for 12-month settlement, because what's the point? And this was a 12-month settlement. This particular person specifically wanted a 12-month settlement. They were actually waiting to get into another property that was about to settle, and this was their home. So I used the bank guarantee. I actually got the bank guarantee for nothing, for free, because as you probably don't know this, but if you're in private banking, private bankers can waive fees on anything from loans to accounts to bank guarantees. They have discretionary lending. So because I was a good client and I've done a lot of stuff with private banking, they actually waived the fee for the bank guarantee completely for me. So I got it for free. I didn't pay a cent for it. It was a substitute for 10%. I still had to come up with $55,000 at settlement in December 2008, which I already had in my trading account. I just didn't want to free it up because I wanted to make money out of options, and I was killing it in options. I love trading options. This is the property there. You can see this from RP Data CoreLogic. It's crazy because in 1976, the year that I was born, on 48, the property sold for $72,900, which is crazy. Then in 1980, it was $750, $75,500. And then in 2007, when I bought it, was $550,000. And it's a 1960s house, 3-bedroom. So purchase price $550, stamp duty was $35,185. Legal fees, 2,590. Total cost, 587,775. Valuation in December 2008 was 750. And what I did was I borrow against the valuation. You see, if you go into private banking, they can give you the loan against the contract or the valuation, whichever one is higher. If you go to consumer lending, it's always the lower of the two. So even though the valuation comes in higher, they won't give you the loan against the valuation. They'll give it to you about a lower contract of sale. In private banking or business banking in banks, they can have the discretion of giving you a loan against the higher valuation. So I borrowed 80% against 750, which is $600,000, and that 600 covered all my fees. Cash out at settlement was $12,225, which I put into my trading account and bought more options. Okay, so it was actually no money down in the true sense of the word, and I created that gap, and I settled the property with no money down. It's a 1,334 square meter block, which can be developed into 4 townhouses eventually. Equity position at settlement was $150,000 because it was worth $750, and the and the purchase price was $550 plus all the costs. So the equity was around $150,000, which is sweet, But here's the best thing: the property then got valued in June 2022 for 1.68 million. This is from CBRE. Here's the valuation, and now it's worth $2 million. I would say the latest real estate agent appraisal was 1.95 to 2,050,000, which is really cool. So once again, this is with the purchase price, $550 in December, stamp duty $35,185, legal fees all inclusive $2,590, total purchase cost $587,775, valuation in June 22 1.68 million, estimated today value 1.89. It's actually high now. I just can't be bothered updating the slides. It's got a good land component. It's just land value. The house is basically nothing. It's just land. It's a 1,300 square meter block in Vermont. It's worth nearly $2 million. 4 townhouse development site. Equity position today, 1.3 million. Beautiful. How much did it cost me, guys? Nothing. Well, it cost me years of going to seminars like Stephen McKnight's seminars and reading hundreds of books and educating myself to the point where I could actually execute this transaction. So the amount of hours it took me is hundreds of hours. The amount of money it took me is zero. That's the thing. The more educated you become, the less money you're going to use. The less educated you are, the more money you're going to be using. And you're going to lose time and money. And remember, you can always get more money, but you can't get more time. Time is always running out. That's the thing. So how many of these transactions do you need in your lifetime to set yourself up like financially? One. Do you know how many deposits I took out from this property and how many investment properties I purchased just from this property? Because I used up a lot of the equity on deposits to buy other properties. So this is how wealthy people get wealthy. They leverage growth assets and they borrow against them, and they take equity out or use bank guarantees, deposit bonds, and they buy more properties and more growth assets. But it all comes down to knowledge, education. That's the thing, guys. And the sooner you learn these things, the sooner you master these things, the sooner you get the consultants around you, your lawyer, your accountant, your mortgage broker that understand these, the quicker you can do these transactions. And this is applicable anywhere in Australia, in any market. You can do this in Tassie, Adelaide, anywhere. ACT, the same rules anyway, guys. What part of the Australian property market cycle represents the best opportunity to use bank guarantees, deposit bonds? So remember, the market is cyclical, right? You got the peak of the market, decline, bottom, and growth. So this is where it's the best time to use during the boom phase, because you're trying to create that 20% gap. You're speculating that the property is going to go from 500,000 to 600,000, right? From $1 million to 1.2 million. If you can create a 20% gap and borrow 80% against that, you can create 10% deposit. So 80% of obviously 100,000 is 80,000, and you need just 50,000 for the 10% deposit. 80% of 200,000 is 160, and you need just 100,000. So you want to create a gap where the valuation, by the time it settles, is so high they can borrow against the higher valuation, and that covers your stamp duty and your deposit and everything else. So the only thing you're coming up with which you can put on your credit card, is the fee for the bank guaranteed deposit bond. The worst time to do this is when it's 12 o'clock going to 3 o'clock, which is the decline of the market. So if you're going to risk, if you're going to speculate, which is what this is effectively, if you're trying to create the gap of 20%, then the only time I would recommend to do this is we're at 9 o'clock on the property clock going up to 12. I even wouldn't do it at 6 to 9 because you don't know what's going to happen at 6 to 9, but 9 to 12 is pretty much guaranteed it's going to boom. It's just a question of by how much. So the Harry Todd White property clock shows us Melbourne is exactly now at 9 o'clock going to the peak of the market, which is 12. So now it's the best time to do this with townhouses, with long-term settlement, with larger townhouse developments where they have to build underground, which is a 2-year build, or apartments, 3 years, 4 years, 5 years off the plan. Look, 90-day settlements, it's probably not worth it economically to do this because you can just, I don't know how much you're going to save. We're talking hundreds of dollars. But if you're going to save thousands of dollars and leverage yourself, then definitely long-term settlements is the way to do it. Now, remember, it's always the best time to buy when it's the bottom of the market. But like I always keep saying, it's timing of the market is not the key. It's timing the market. Yes, it's always nice to buy at the bottom, always nice. Except most of the time when I got to the bottom, there was nothing good to buy and you couldn't borrow as much money as you wanted to. So waiting for the bottom, guys, is a trap psychologically. You know, it is a trap because I've seen people get to the bottom and their interest rate is 7% and they can't borrow anything and there's nothing good to buy anyway. And they go, I've just wasted 5 years of my life waiting for this magic moment where it's the bottom of the market and I can't do anything, you know? And as a mortgage broker, I used to experience this all the time with clients. I used to tell them, mate, you're paying 100 grand in tax a year. You're an idiot. Get some properties. Oh, no, I'm going to wait for the market to correct. When's it going to correct? Oh, 5 years from now. We can't continue. It's unsustainable. It's always been unsustainable since I was 18 years of age. I'm 48 now. For the last 30 years, the market is unsustainable. It has to correct. It has to crash. It just can't keep going this way, Conrad, because. Okay? Okay, cool. Don't buy it. And then they get to the bottom and then they get a divorce, or I don't know, they get something goes wrong. So it is what it is. So with apartments, this is perfect for apartments. If you're buying apartments, guys, buy architectural design apartments in St Kilda, in Toorak. You know, don't go and buy stupid places like Footscray or some Caroline Springs. You know, I mean, why would you live in an apartment in Caroline Springs? It's the dumbest thing I've ever heard in my life. You know, and they just keep selling. Oh, okay, you know what? Why would you even live in a house in Caroline Springs? That's my question. But anyway, don't email me if you live in Caroline Springs. So buy in areas where there's a 3-to-1 ratio gap between a 2-bedroom apartment and a detached house. So for example, in Toorak, the median price is 4.5 million. On average, 2-bedder sells for 900. There's a 4-to-1 ratio. That's when apartments do work. If the ratio is too close, nearly 1-to-1, it doesn't work. So if a house is 900 and a 2-bedroom is 700, that doesn't work at all. Townhouses, if it's a 6 to 7 month settlement, it's probably not worth it unless you're like trading, you're using equity to trade and you're making a really good return. Like when I was trading options, making 6-7% consistently every month, then it was silly for me to use any cash deposits, even for 6 months settlements, because I could make money with that money. And obviously I had scarcity of money. If you're not using the money for anything and it's just sitting in a bank account, do your mathematics. Work out whether it's worthwhile to use a bank guarantee deposit bond as a cash substitute for a townhouse or a house with a 90-day, you know, settlement to 6 months. It might not be worth it, you know. 12 months probably worth it. 2 years definitely worth it. 2 years is a long term, especially if you're buying something with the intention and you've done your due diligence that it's going to create that 20% gap. Then definitely that's a really good time to get in and do that. Absolutely. House and land probably doesn't work unless you buy in the future release. So you might have a stage release master plan community, which is being sold over 10 years, and stage number 30 is being sold 5 years from now. Even blocks won't be titled for 3 years. Then do that. I've got a friend who's in Queensland. All he does is speculates, and he lives there. He lives in the Sunshine Coast. He knows the market really well. He's a buyer's advocate, and he doesn't actually work anymore with clients. He just does it. He just makes more money for himself. But he buys on average 10 to 15 house and land blocks per month for himself using bank guarantees deposit bonds. In the last usually stage, of master plan communities, and then he on sells them or settles them sometimes, and then sells them, and he makes a killing. He's lost money as well. Things have turned against him. And during COVID-19, he lost a bit of money. There was massive issues with settlements, but normally over 10 years, he'll make really good money, and he uses bank guarantees always, and deposit bonds instead of cash. I hope you enjoyed that video, guys. And if you're interested in learning more, I want to just tell you that I'm running a 2-day live event in Melbourne in my office in St Kilda called the Real Estate Investing Fast Track Weekend. There's 3 speakers there. There's Cameron Fisher from Changing Places Real Estate, who's a registered valuer. He's actually been in real estate for over 50 years now. Myself and Stephen McClutchy from Loans Australia, who's settled $1 billion in lending, and Loans Australia has access to 158 lenders. Over the 3 days, we're going to educate you step by step on how to build, structure, automate a massive property portfolio that has potential to replace your income and give you true financial independence. So if that's something that resonates with you, definitely register. Tickets are $47 for the event, and you get a copy of my book as well, Real Estate Investing Made Simple, which is kind of like a manual for the 2-day event. Lunch is included as well, so it's fully catered event. It's very small, intimate. It's only 55 people maximum, so you get a really good network, and you will get good interaction with other like-minded individuals. What I cover at the event is I'm going to basically go through all the property cycles, show you which properties to target, which areas to avoid, like a P. Diddy party. I was going to say Tina Arena concert, but a lot of people don't even know who Tina Arena is anymore. So I'm changing my slogan to a P. Diddy party. Avoid it like a P. Diddy party. So I'm going to go through house and land, townhouses, apartments, which areas to target, which suburbs to target, which areas to avoid, and more importantly, how to structure your portfolio through trust, and how to create a system where you're continuously borrowing money far beyond what you could borrow as an individual person. We also cover 18 powerful ways to supercharge your borrowing capacity, 19 crucial questions to ask your mortgage broker and qualify them, because there's a lot of unqualified mortgage brokers out there, guys, that are giving advice, and it's holding people back. 12 common deadly mistakes that people make that will set you back years, and also how to balance your property portfolio between cash flow positive and growth properties, and much, much more. Here's a couple of examples that I've sourced for my clients through my sourcing company, Investors Prime Real Estate. I just want to show you. This is called the Lincoln Collection, and this is from a really good developer called Branson Group. Now, back in 2020, Essendon was one of my favorite suburbs to source properties in. I thought it was undervalued. Essendon's always been in the top 20 best capital growth suburbs in Melbourne, but especially in 2020, 21, it was my favorite suburb to source properties in. I just thought it was such massive potential and value. So this is an example of a property that was sold. It took 2 years to build. It was sold for $1,045,000. Deposit was $104,500. So 10%. You could have used a bank guaranteed deposit bond. This developer accepted them both, no problem. It settled in September 22, and it settled for $1.25 million. It was sold in December 23, and the person made $205,000. This was townhouse number 6, 8 to 10 Lincoln Road, Essendon, 4-bedroom, 2.5 bathroom, 2-car garage. Go there and check it out. It's an amazing project. So, imagine you did that deal and it cost you $3,000 for the bank guarantee deposit bond. By the time you settle, you've made that 20% gap, and then you can basically cover your deposit bond and settlement at 80%, at 90%, where you can cover the whole thing. So if you just did one transaction like this every few years, you can build up a whole property portfolio that could change your whole life and your family's life and create true financial independence. This is another project from the same developer, the Branson Group. And this was this is townhouse number 5 in Overman Court in Essendon. Great developer, great development, great architect. 4 bedrooms, 3 bathroom, 2-car garage. Purchase price $995,000. Deposit was $99,500, so just under $100,000. It settled in October 2019. It was sourced in 2017. Took 2 years to build. By the time it completed and settled in 2019, it was valued at $1,185,000. It was sold in 21, and the person made $190,000 uplift. 19.1%. Another example. Now, both of these projects were sold completely off market. They were never advertised on the realestate.com domain. The only person that knew about these projects was myself, the developer, the end buyer. So during the event, I'm going to show you how to access off-market properties and developments like this. Remember, the stuff that's on realestate.com and domain.com is the tuna that John West rejected. Okay, they're the leftovers that all the investors, all the smart people have looked at, and now the public gets to buy them. The best properties in Melbourne and Sydney get sold completely off market. They never get advertised on realestate.com domain in any way, shape, or form. No one knows about them except for the people that need to know about them. And you want to become one of these people. You need to know how to tap into that network, how to identify these opportunities, and how to make these kind of money. And this is going to create that wealth for you that you really, that's going to make a huge difference in your life. So once again, I teach all these strategies in my event. Tickets only $47. And once again, it includes a hard copy of my book, Australian Real Estate Investing Made Simple, which is like a manual for the whole event. Also, guys, you get a free home study video, which is a recording of the 2-day event from a few years ago by attending the event. As I say, repetition is the mother of skill. There's a lot of contents that I cover at the event. So what we've done is every few years we'll record the event and give it to you free for attending, which is worth $497. And that way you can watch it over and over and over, because really 90% of the stuff hasn't changed in 5 years. The only thing that's changed is where we are in the market, and the interest rates have changed, but the fundamentals have not changed. It's the same stuff over and over. Now you can access this by going to the event. Also, there's a link below. We can access this recording and watch it as well. It's 15 hours of video and 433-page manual, and you'll learn a lot of information from there. We give you the latest one by attending the event. If you go down below, this is the it's a really old one that we give you for free. By attending the event, you get the latest one. And look, I think it's priceless. I mean, how can you price this information? If you do one deal, it makes you $200,000. I mean, how can you even price that information? It's crazy to think about it. So that's it from me, guys. I hope you enjoy this session. This is Conrad Bobby Lake signing out. Also, before I go, I have a limited strategy sessions available, and I'm booked down now for weeks ahead, but I know that it's going to eventually slow down. So if you want to have a strategy session with me and develop a plan, an action plan of how you can build wealth yourself, I encourage you to book yourself in. Remember, the most important thing is if you fail to plan, you plan to fail. And most people spend so much time wasted going from A to B. Well, I can just show you a clear path of how to get from A to B with the least amount of effort, maximum effectiveness. You get an hour strategy with myself. I basically sit down with you on Zoom. I don't do any office appointments anymore. I'm just so busy at the moment. And 30% of my clients are from Sydney, 10% are from interstate or international. I got clients in Dubai, Malaysia, Singapore, New York, expats working overseas, buying properties here in Australia. So it's now a Zoom call. You walk away with a clear strategy. You get an introduction to my mortgage broker, accountant, property solicitor, conveyancer, quantity surveyor, insurance broker, all the people that you need in your mastermind team to create your wealth. This is an example of who I use personally for my wealth, and they're all in Melbourne. And look, I can use anyone. They are the best in the industry. So there's no chance that there's anyone better. Look, there are probably there's other companies that I use as well from time to time. I've got 3 lawyers that I use, 4 mortgage brokers, and 2 business bankers. So you walk away with a real clear strategy of where you are, where you want to be, and how to get there. It's a step-by-step system in writing. I'll give you a report saying if you want to get started with me and my team, this is what we can achieve over the next 5 years. This is how many properties you can secure, and this is how much passive income you can receive. And it's free. There's no cost. The only thing is, guys, the cheapest properties that I'm sourcing are about $700,000 now. The average property is about $1,100,000. And look, there's a lot of properties I'm doing at 1.5, 1.7, 2 million. I mean, you can't get Port Melbourne anymore for $1 million. And there's nothing even close to that. So as a single borrower, you need to be at least $95,000. Or be pre-approved for $700,000 purchase and have at least $112,000 equity. Couple, you need to be on that 130, 140 combined income with $112,000 equity, which means you can actually afford to buy a $700,000 townhouse, which is kind of the cheapest property, or a 2-bedroom apartment, which is kind of the cheapest worth buying, where you're going to get some growth. So if you do qualify, just send me an email, conrad@investorsprime.com.au, and just put in the headline, you're wanting a strategy session with myself personally, and I'll reply to you and we can book something in that's mutually convenient. That's it from me, guys. I hope you enjoyed this video, and I hope to meet you in person at one of my up and coming live events. This is Conrad Bobilak, and I'll see you on the inside.